Hello, everybody, and welcome back to FX Street. My name is Akash, and today we're going to be taking a look at Cardano and discuss what's happening with it. Before we get into the details, please make sure to head on over to our YouTube channel, and please head on over to our YouTube channel and hit the subscribe button. And if you want to stay updated for the hottest trends in crypto market, make sure to also click on the bell icon. You can give us a follow on Twitter at FX's Crypto, and if you enjoy the content that I put out, make sure to give me a follow as well at Mangyako with a zero at the end. Right? If you click this link here in my bio, it will redirect you to my YouTube channel where I post market updates and my take on basically the trades that I'm planning to take over the week, and the results or like the updates for that particular trade or trades are provided in my Telegram channel, which you can find by clicking on this link here. Yeah, so yeah, we're going to be discussing Cardano, right? Like it's pretty simple trading Cardano, right? If you look at what's happening on a 4-hour time frame since June 18th crash, right? Let's break this down, right? What is a liquidity fractal? What is a liquidity run? So basically any swing low has a bit of sell stops resting below it, and those sell stops are basically investors that kind of longed, right? So people that longed Cardano here have the sell stops below the wicks, right? So a liquidity run would indicate that it is basically a sort of market manipulation where the price dips, like purposefully dips below the previously formed lows, collects the sell stop liquidity, and then goes in the opposite direction, right? So it is basically a drive in the opposite direction before the price actually goes into the direction it should have gone. So this was the first liquidity run where the price dipped on June 18th below the previously formed lows on June 13th. So this was a double bottom. There's a ton of sell stop liquidity resting below here. The price collects that liquidity, recovers above it, retests this low again here, as you can see on 19th June, and then rallies higher, right? And then we have this particular low, which was swept on 13th July. That was also the first CPI announcement of like the second half, which was really interesting, right? Uh, then after that, the price recovered. It took a while to recover. There was an initial rejection here, followed by that it was a recovery. Price ran up, then created a couple of equal lows, ran below that, rallied again. A lot of equal lows. We didn't actually get a liquidity run here, but like the price continued going higher, progressed progressively, and then we got another equal lows. That was swept here, and then the price rallied again. So finally, this particular crash here, extending from 14th August to 20th August, collected liquidity resting above all of these lows, I think all the way up to 26th of July, right? So this was the fifth liquidity run. Uh, the price did recover above, like there were a lot of lows to recover above, so it did take its time and then rallied higher again, right? So basically that brings us to where we are right now. This was basically a liquidity run 8, right? Price swept below this, recovered above it pretty quickly, and then it was a really quick run up, which is 6% upswing. If you did long here, your take profit levels could have been here, which is a 4.48% upswing, or you could have placed it here at 5.6%. So now that the price is after this, we saw another massive drop here where Cardano price swept the liquidity resting below the lows formed up to 30th of August. Now, although there is a quick liquidity run here, I feel like we, due to the FOMC, right, we could either do something like this, come back here, collect liquidity resting below these lows, recover, boom, go up, kind of fill the FEG that is present up to this point. And this would be a really good setup, provided we get a good recovery above it. Very crude setup. I'm not sure whether the price is going to form a low, so please don't consider this as an actual trade setup. So this is what I'm expecting, right? But if the price does dip all the way down below these equal lows formed on late August, basically, right? If this happens, wait for a recovery above this, in which case you would open another long position here with wherever the price forms a low, and then again book profits at the FEG with this particular move. So that's it. It's really, there's really nothing too complicated about Cardano. Just look for these liquidity fractals, long it. That's pretty much it. So to summarize this, right, what I'm expecting is if we get a liquidity run below this low, we're looking at roughly a 12% upswing. If we get a liquidity run below this low, then we're looking at a 13% upswing. Nothing really interesting, but if Bitcoin price does go up to 25K, then you can expect this the continuation of this rally all the way up to 0.53, right? Now that, imagine like the best case scenario would be a 25% upswing, roughly 25% upswing. And hold up, let's see what's happening here. Okay, so if we mark out the range high and range low, okay, so the FEG is here and the range high is here. So 0.60 also seems like a possible outcomes. So with the most profitable outcome would be if the price goes up and reaches range high, in which case you're looking at a 44% upswing. So that is pretty much it for Cardano, guys. If you enjoyed this analysis, please make sure to like, comment, and subscribe. And if you want to stay updated on what Cardano is doing, make sure to go ahead and join my Telegram group by clicking on this link here.